moving around. Let's talk buying. Bought anything any good, Steve?
Well, I don't know about that because I'm down on both of them. But this quarter I've added two sort of bigger positions to my portfolio. I've made some small little sort of additions towards the bottom end of this portfolio, but the two biggest that I've added in, the first one would be Adidas. To be fair, I've been buying this one all quarter. It's actually become my 9th biggest position. It's fallen all quarter, and it's the standard retail issues that you've been experiencing at every sort of retail-y sort of store you've got, and especially with Nike, who reported the other week, and it's all to do with the inventory pressures. They're basically fire selling their inventory. They want to get the newer, fresher stuff in front of you, but in order to do so, they've got to clear out the warehouse. I don't know if you've been on Hot UK Deals recently. Whenever the Adidas sale comes up, there's a lot of comments that said, hey, look, Adidas, the new DFS. And that's mainly because they're fire selling everything, all their excess inventory. And that's been hitting the share price. But look, I think that's a lot of short-term pain, long-term gain. I think once they get rid of this inventory, there's the World Cup coming up, which should be very good for Adidas. Their kits have been, in my opinion, and in critics' opinion, the best-looking kits. And that usually means there'll be some good sales. World Cups are usually good times for companies like Adidas and for companies like Nike, so that'll be a nice short-term boon to hit the short-term pain. But long-term, Adidas is about 15 PE. I think that might look a bit worse this time next year, when they've been clearing out inventory for maybe not a profit or break even. That should look a bit untidy, but going forward, I think we're going to be absolutely fine with Adidas. My other one is actually Adobe. Adidas is about my 9th biggest position. I don't know if I said that, but Adobe comes in at 16th. I've only actually bought 2 tranches of this so far, which it might be interesting for people who heard me poo-poo the Figma deal when that came out.
But it's interesting for me.
Yeah, so I've done a lot of reading about why Adobe has bought Figma, and I'll try and distill it as quickly as I can into a couple of minutes, because it didn't make any sense to me at first, and then it started to make sense to me the more I've read. And it's the idea of technical debt. And technical debt is not actually a debt. It's not a monetary thing. It's the debt that's in your technical systems. So if you think about when Adobe started to make its products, it wasn't in a collaboration sort of style environment in the way that we currently work. So if you think about Microsoft Word, if you wanted to have somebody, even just 5 years ago, you wanted to make a document and you wanted Steve to add something to it for you, you would have to write your bid up, save it, attach the file to an email and send it to Steve. And that's how Microsoft Word worked, and that's how Adobe systems are built. So they can't be collaboratively edited. You would have to save the file, you'd have to send it to somebody else who had an Adobe product, and they would have to open it and do it that way. Well, nowadays, Steve and I use Google Docs, so we can both edit the same document at the same time. Steve can be typing at the top of the document, and I can be typing at the bottom. He can highlight to me something at the top. We can look at it together. We can edit it together. I can pop a full stop in even while he's writing if we need to. And that's how design currently works. Gone since are the times where marketing teams was one designer and he produced everything. He just had a stack of work. I need a logo for this, and this new product needs a logo, and this one needs a new bottle wrapper. There's big teams inside of marketing departments, and it makes sense that the content writer can be writing the content as you're designing the label, as the other guy next to you is doing the logo. And that's the problem. Adobe didn't have that, and Figma does have it. So the question would be, why don't they just build it? Well, the problem is that might take them 3 or 4 years to build that to any decent degree, and by that time Figma would be a lot bigger. So they're paying $20 billion now because they would have had to pay $20 billion at any point, and I think they have realised that they had a big weakness in their product that was just about to be exploited. And what this does is it gives them essentially a brand new operating system for Adobe to rebuild their products into, and to add to Figma's already sort of batch of products that they have, and it just limits that technical debt a little bit and doesn't leave them so exposed. So I think it looks pretty cheap at the moment. I still think they've paid too much, but I don't think there's anything they can do about that. The price has come down a lot to compensate that risk for me, hence it was a buy.
Right, so that's kind of the thing that I got around to thinking about with Adobe. We settled on the idea, and I think you still are on the idea, that this was an expensive acquisition.
Yeah.
Then. we can get over the idea that or get towards the idea that maybe they didn't have much choice about it, but that still doesn't change the fact that it's expensive. So when I was kind of thinking about it afterwards, I guess, the way I was trying to think of it was okay, whack 20 billion on Adobe's market cap. There was a 20 billion acquisition, right?
Yep.
Yeah, so whack 20 billion on the market cap then, and let's assume for the moment then that they've got absolutely nothing for this, which they clearly haven't. Do you still like the stock enough 20 billion higher if you have to pay 20 billion more for nothing, which is the worst case scenario? I suppose they've just been fined 20 billion then, or something like that. Yeah, it's not a terrible buy, 20 billion up from here. I mean, it's nice to buy 20 billion short, but realistically they're not acquiring nothing. But even if you think of that as your kind of margin of safety thing here, assume for the moment that they've achieved nothing by doing this and just wasted all the damn money, even if we think that probably some of it is an overpayment. If you still like it there, that's probably the easiest way to think about these kinds of things, I think, and that makes a lot of kind of sense to me here. Here's something that makes kind of slightly less sense on the subject of Adidas for the moment. You said they have the nicest kits. Do you think many people buy World Cup football kits based on how nice they are? I mean, do you kind of buy a Paraguay shirt because you think it looks better than the kind of England one?
Well, yeah, but it helps that the kit actually looks nice for the people who are nationals to that country.
Paraguayans.
Yeah, like Paraguayans aren't going to buy it if it looks awful. That's the thinking behind that one. But I don't know if you've actually looked at the kits. There are some shockers out there. But actually, Adidas's kits look really nice.
Okay. Yeah, I get the thought then that the idea is that people of that country are more likely to buy the kits if they look good. I always assume kind of football. Maybe I'm thinking of more domestic football, I guess. I mean, there are some people who wander around in pretty horrific kits that their clubs have churned out kind of year after year because they will buy that year's kit kind of come what may. But yeah, maybe there is something to the idea that you might go just once for a kind of England kit if you think it looks sort of particularly good. Adidas looks cheap and has looked cheap for ages. I mean, you pointed out the thing that I was going to say, which is that Nike reported earnings. Those earnings came in, well, I thought they came in pretty all right in terms of the numbers they actually reported, for what it's worth. And then just, I think, either guidance or something else in the report just drove the stock down fairly sharply. Yeah, that's the one. I was watching a video from Wall Street Journal today. I really should stop saying that. I should say, I saw in Wall Street Journal, which makes it sound like I was reading rather than looking at YouTube. And somehow that sort of makes me feel more legitimate as a researcher of stuff. But yeah, I was looking at kind of general bullwhip inventory stuff and the thought that might have some way to go for the time being, because for a long time retailers, including Nike, had done a decent job of kind of matching their inventory levels to demand. And then, of course, COVID happened and demand went through the roof. And then post-COVID happened, I guess, and demand went through the floor. So companies like Nike, like Adidas, got hit quite hard by that sort of thing, I guess, because they're... this word again, athleisure, wear was extremely popular with kind of stay-at-home workout people. But Adidas is constantly on my radar of things I have an interest in. It's making its way up your portfolio then, about 9, you said? Yeah,
it is actually at its full allocation now. It is one of those stocks that's very difficult to not buy when you get fresh money into the portfolio. You look at it and you think, okay, well, where is everything from the last time I bought it? And without a doubt, Adidas has dropped another 6% by then. So, there's always been a small, 200 in Adidas, and then we'll have a look at all the other things. But right where it sits now, I'm down about 12% on it or something like that. It right now is about as much money as I would like to put in Adidas until the portfolio value grows, obviously, which has not been an issue this year at all.
Cool. So buying on my side has been fairly spread out. I mean, by and large with my portfolio, if I own it and if I didn't sell it, I've pretty much bought it. So I'll talk about kind of, I guess, what is some of the more interesting parts of my buying, and it's the stuff I've been doing in recent days and weeks, which is more or less UK-sided, or almost entirely UK-sided. So going into this quarter, I think I owned UK stock positions in Games Workshop and Experian and Rightmove, I think. And coming out of this quarter, I own significantly bigger positions in Rightmove, a significantly smaller position in Games Workshop, a new position in Halma, and the only stock that I haven't bought or sold at all this quarter is Experian. So let's talk about some of the stuff I kind of did with the other things. Games Workshop and Rightmove, I actually sold both of them entirely because I'd sort of given up about a month and a half ago the idea that I was going to be able to turn them into kind of meaningful positions. They both run to about 20% higher than I bought them at. There is no FX to compensate for anything in that way, and I thought that's enough of these things that I have about 200 quid in each of these things. I'm kicking them out effectively. And then we had the kind of big run on the pound and so on, and everything went down, and I grabbed some shares again in Rightmove. So my Rightmove, because you only kind of write these things down, not write these things down, I mean make note of these things when it's the end of a quarter, or I do anyway, it looks like my Rightmove stake has increased by 900%, which strictly it has, but I sold it and then bought a whole load more afterwards, so it wasn't just a kind of adding to it when I saw a moment there. And actually, that probably worked out slightly better for me, but entirely by accident. I pretty much left that stock for dead and then came back to it when it fell below, I think it fell below a fiver or something along those lines.
Still is, I think.
Halma is one that I've talked about on this show. I quite like it, and I was trying to buy it below 20 quid ago and just about managed that, but got part of a stake in Games Workshop I sold, and then the thing really had a big fall as it turned out that it's not as inflation resistant as maybe people thought it was, because their sales are kind of dropping off. I think, mentioned this before, and I thought this is kind of more central to people's being than maybe a lot of the outsiders think. I feel like it's one of these things that is not quite a cult, but the people on the outside don't realise how much the people on the inside care about it. And I thought that would lead to it being a bit more robust in the face of inflation than it looks like it will be. However, stock went absolutely mad and down, and I have bought back part of it, so it looks like I've sold 80% of my investment, which I did. I sold the other 20% as well, and I've now bought a small part of it kind of back. So my buying, apart from the two bits I mentioned at the top of my portfolio, both of which are new, has mostly been kind of UK-sided and recently. As I start to see some attractive kind of things there. I really want to try and get some Diploma shares at a decent price here. I think I might still get a chance to, but I haven't quite. I've been very close to pulling a trigger on that one, but not yet.
So Games Workshop, are you out of that entirely now?
No, I now have 2 shares in it, which I give it another quarter, and I will either have multiplied that by a factor of 10 or have sold it all.
That's what I was going to say, because I was looking at their... one of the criticisms that they get is that they're not great at monetizing their IP, and it was only the other week I don't know if I mentioned it on the show or not, but I was looking at all of their game releases that they've got, and they have been heavily pushing out Warhammer to a number of studios and getting them to create content, and it would only take 1 or 2 of them, and some of them are already getting good reviews as well, good preview reviews. So I would suggest that any issue they're having could be short-termed, or at least the problems on the ground can be solved by their digital content, at least in the short term. It is an interesting stock to me. Halma, Steve, how big of a position is that in your portfolio?
It is currently 13th in my portfolio, which is not that big. I have about 30 shares or so in this, about 600 quid. There might be opportunities to do a bit more there, but I'm starting to run out of things in the ISA that I can deposit a little bit, which means that I need to just think a bit carefully about how I want to kind of proceed around that. I'm not averse to investing in a GIA or something along those lines, but under 200 and I start, under 20 and I start taking a bit more of an interest there. So these are stuff that are kind of perhaps coming up on the rails, and it feels like there's been a fair bit of volatility around in the UK markets, and I wouldn't be surprised if I got an opportunity to do something there that was a bit more meaningful.
Any others that you're looking to add in the very short term?
I have a constant interest in LSEG, which I think you own and have done for a little while and have talked about on this show a fair bit. That would be nice to buy. And to be honest, there's about another 3 that I'm looking to understand better. So they include Croda International, Spirax, Sarco Engineering, and there's another one that I've now forgotten what it is. It's not Aston Martin, Which
Rolls-Royce?
I prefer Rolls-Royce to Aston Martin for what it's worth, but I'd forgotten about Aston Martin until I remembered it the other day, and I was thinking, is there any stock I think I would never buy? And I think it's probably that one, and if I got a free share, I would sell it so fast it's unbelievable.
I was going to say, I think I've got a couple of positions I'm looking to build out a bit more, but the one I'm probably going to focus on is Halion. I've only got a really small position that's 100 shares, and it's about 260, I think, for a share, or somewhere around that kind of range. So it's about 250 quid position, and I'm thinking potentially 5x that position over a period of time. The problem is it's so steady, isn't it? It's a consumer stock essentially, so it's not going to move around too much. But yeah, that's definitely one I'm looking into. Should we move on to sells?
Yep. What have you been selling, if anything?